Addition is coming, how much growth has come largely because of new, and how much growth has happened to existing? Can you be specific with the number here?
Yes, so then if I will compare the growth in the December 23, the growth was 26% and November was only 20%. So 6% was growth on account of the volume in December alone. So that was the kind of 6.5% kind of volume growth we have witnessed across the portfolio.
Right. But Anil, are you also expecting any hike in toll rates from NHAI for the new fiscal?
So typically, most of the NHI projects are linked with 3% fixed plus 40% of WPI, and rate revision happens on 1st of April every year. So 1st of April this year also will have a tariff revision as done in the various years in the past.
Tell me, what's the current order book looking like, and what are the orders that you have in the pipeline?
The current order book, including O&M, is roughly 33,000 crores. Out of that, 10,000 crores will be executed over the period of 2.5 years. That includes the EPC order book and the O&M order book, which is executable over the period of 2.5 years. And now coming to the new order book, as we spoken last time, now there is shift in the mode of award. And most of the project, as against 5 to 7% projects on BOT mode earlier years, now that has changing significantly, and 40 to 50% will be on a BOT basis. And the government on the NHI website, there is almost 20 to 25,000 worth of project is already to be bidded out on BOT basis in next couple of months. Secondly, we have unique proposition as far as BOT projects are concerned. We have private InvIT in place where IRB has 51% stake and Government of Singapore has a 49% stake. So that reduces our equity contribution. If the project typically funded 70-30 debt equity, out of that 30% equity, we have to infuse only 15% as equity. And we generate all the EPC and O&M of these projects are executed by IRB, and we generate healthy margin of around 22 to 23% on these projects. And our equity portion can be contributed out of the margin itself. So then we historically also we were eyeing for the more BOT and TOT, and now considering we have a lean balance sheet, we will the shift of the government to for the more BOT project will definitely help the company.
Okay, fair enough, Mr. Yadav. Morning. So what about the pace of ordering? Because I understand pre-elections, it generally slows down. Is that something that you're witnessing right now? Will that impact your order inflow target that you spoke of?
I think your observation is correct. And there has been slowdown in terms of award as far as EPC and the HAM project is concerned. And this is not because of the election. It's because of there is restriction on borrowing of the NHI. And the government focus is more on private participation. And we are going to see major shift from the EPC and HAM to BOT and TOT, and which we have already witnessed in this financial year. And going forward, also it will be predominantly more of BOT and TOT. And the player who has lean balance sheet will definitely benefit out of this change of the shift of the award activity. And I think there is sufficient number of projects on a BOT basis to be bidded out in next couple of months.
All right, really appreciate your time. Thank you for joining us. Markets, what do we have? A green, green and green. Bank Nifty, Nifty, Sensex. So it's not, the brute force of liquidity and sentiment are two things which can weigh the markets differently. You're going back lower point at the resistance, you're bouncing back. You're not doing anything special, but that does not mean markets will go down. Just because you expect markets to come down, they're not going to come down. Markets are a very complex thing in the short term. There is sentiment, there are flows, there are technicals, and then there are global cues. All that factor put together, I guess it's easy to understand that momentum is not there on the upside, on the downside. Downside is limited, and you want to be buyer on bad days, and you do not want to chase the momentum like you did in October to December. That is a big differentiating strategy, if you frankly ask me. All right, gives me great pleasure now to bring on board Mr. Ashok Tyagi, whole-time director with the DLF. Tyagi Saab, good morning.
Good morning, sir.
70 to 100 crore is what you've raised in your new project in less than 72 hours.
That is correct.
Is it true?
No, it is true. We made an official stock exchange release also now. This was a project just off the southern periphery road in Gurgaon, and it's a relatively newer geography for us. And we launched this project, Privana South, about 1,100 odd apartments costing about 7 crores each. And it's true that it all got sold in 72 hours.
What was the average price?
And one more thing, Nikunj,
Yes,
is
please.
that this time, unlike the industry practice, we did not take a booking amount of 5 lakhs or 10 lakhs. We actually upped the booking amount to 50 lakhs to sort of filter away the non-serious investors. And we still, after the allotment, we still have a wait list of people who are unhappy with us that they did not get the allotment.
What is the average price of that area, and at what average price you've sold?
So we've sold at a pricing of about 18,000 rupees per square foot saleable, which is about 7 crores per unit for a 4-bedroom, 7-quarter unit, in that sense. So it's a pretty generous unit. I mean, we do believe that the price point at which we have sold is at least 20% higher than the price point that we ourselves were expecting even, say, about 3 months back. And I think two pieces have contributed. Obviously, the DLF brand and the fact that that in that price point, the offerings from credible developers have tended to be sort of, very narrow. And B, I think infrastructurally, that area of Gurgaon has really improved and is coming up even further. In fact, just about a few hundred meters from this, we have the new office complex that we built up for American Express coming up. So I think that area overall is possibly one area where hopefully there should be future growth of within this Gurgaon, at least in this price segment.
How does one know that the interest what you've got, these are genuine buyers or these are investors who may just be looking at a flip?
So Nikunj, here, the reason we easily put the price point, the upfront deposit at 50 lakhs, which frankly is unheard of in this segment, was to ensure that even if somebody is buying a second home or a third home, he or she is somebody who is relatively serious and is not looking at investing 10 lakhs and in 6 months flipping it out. The second point that we did also was that we restricted an allotment to 1 unit per family. So in fact, even some of my close friends who wanted 2 units, were denied the second unit because we were restricted to 1 unit per family. And to ensure again that there is not a clustering of speculators here. So I think it's a combination of end users, NRIs, and I'd say serious investors.
Mr. Tyagi, stay on with us. We have some visuals that are playing out live on your screens. That's the vibrant Gujarat summit that is taking place. Prime Minister Narendra Modi has just arrived to inaugurate the 10th edition in Gandhinagar, and alongside him are several global leaders, notable among them United Arab Emirates President Mohammed bin Zayed Al Nahyan, who is in attendance of the event. Do remember that this is the 10th edition. It has been envisioned under the leadership of Prime Minister Narendra Modi, and the theme for this year is the gateway to the future. Lots of big corporate voices, companies, partner countries as well are participating in the summit this year. We will be cutting across and getting you all the tidbits as and when they unfold. Apologies for that, Mr. Tyagi, but to get right back to our discussion then, and given that we also have the fact that you've turned net cash positive in Q2 after several years, give us a sense as to whether or not you will be able to maintain the net zero status going ahead as well in light of the kind of launches that you have scheduled.
No, I think so. Clearly, we do believe that we will continue to generate free cash flow from operations on a consistent and a sustained basis. And I think that number, as we have indicated, should be a number between...
Back with closing trades right here on ET Now. Well, Indian Oil and BPCL, they've initiated the process to launch rights issue for green projects. In fact, we have understood from our sources that both IOC as well as BPCL have also appointed lead managers, and the process is likely to be completed by mid-March. In fact, the finance minister, remember, had announced in the budget itself to fund OMCs via equity for green energy projects. And my colleague Prakash Priyadarshi joins in with exclusive details on the same. Prakash?
Yes, we are learning from our sources that the oil marketing companies like IOCL and BPCL have initiated process to launch their right issue. In fact, sources are informing that the IOCL has appointed Axis Securities as a lead manager to launch right issue, and SBI Cap and ICICI Securities will also assist in this process. When it comes to BPCL, we are given to understand that the BPCL has appointed ICICI Securities as a lead manager. IOCL and BPCL will launch right issue to get funding from the government for their green transition projects, and both these companies have already taken permission from their board. When it comes to HPCL, we are given to understand that the ONGC is likely to make preferential share allotment to the government to fund HPCL's green transition projects, and this whole process have to be completed by mid-March. As you are aware that the government had announced rupees 30,000 crore financial support to the oil marketing companies for their green transition projects, but the government does not want to provide this money in a way of subsidy. In fact, government seeks equity from these companies in lieu of funding. The process have been initiated, and we are expecting that this process will be completed by mid-March.
Okay, we'll see how that progresses. But Siddharth, your view on the oil marketing companies, because of late we have seen downgrades come by from a couple of brokerages as well, and these overhangs in terms of rights issues and the government, regulation, etc., which is there for the sector. How would you play this now?
Yeah, I think that has been a big concern in the market of late, mainly on concerns of the government intervention and the price cut, which has not been taken place, but could take place. The rights issue, I think, if they are entering into the green energy space, we have seen how some of the power sector stocks, be it the NTPC, be it Tata Power, the renewable space has led to a strong re-rating for them. I think a shift from the traditional the crude or the traditional fuel to green fuel would only help them scale the business and help them in getting the valuations re-rating. So we are generally positive on the entire space. As of now, we believe that some of these companies do offer some value on table, with the numbers being improving as well as valuations being very comfortable. And top it all, you have the dividend yield comfort on them. So both on the upstream as well as on the downstream, we believe that at least for the next few quarters, results are going to be pretty strong. Brent crude has kind of stabilized. We have seen a lot of volatility globally in terms of geopolitical tensions, some of the wars erupting, and the OPEC production management, which has only led to a stable that $80 to $90 barrel per mark crude has been hovering. That is kind of pretty good for both upstream as well as downstream companies in a stable environment. And some of the GRMs we have seen, which had contracted earlier, and now also started to improve. So marketing side also, the margins should improve going forward.
Okay, got another piece of info coming in, and this time around on FMCG. Even as the standoff between Unilever distributors and management continues, Parle as well as Marico have sweetened the fixed margin for distributors. In fact, we at ET now learned from our sources that Marico has increased fixed margin by 2%. Parle biscuits have also sweetened the margins for distributors. Astha Chopra, my colleague, joins in with more details. Astha, what are you picking up from your sources?
So after the standoff between the distributors and the HUL, other FMCG companies like Marico and Parle have also changed their margin structures. But this time they have sweetened the margin structure for the distributors. They have increased the fixed margin for them. If you talk about the margin structure, then Marico increased their fixed margin structure to 5%, which was 3% earlier. And Parle biscuits have increased their margin structure to 5.3%, which was 3% earlier. And Parle snacks also revised their margin structure to 6.7%, which was 5.5% earlier. They also increased the variable margin, but this is not as burdening as their HUL variable margin structure was. So they all increased the variable margin structure to 1%, which was 0.5% earlier. So the distributors are happy with these fixed margin because they are getting 5 to 6% of fixed margin structure. They are agreeing to the terms of the Marico and Parle, but they are still in the disagreement between the margin structures of HUL, and they are still waiting to HUL to respond back and revise their margin structures.
Okay, point taken. That's the latest coming in as far as HUL is concerned. But let me take it across to Naresh and get a sense for these FMCG companies as well. They have been big underperformers, but are there any names which are breaking out now, Naresh?
So most of these names have been sideways. Few leaders have been currently is Godrej Consumer, which broke out into new highs. Then there is a Imami, which broke out recently and is testing a multi-year highs out here. So out of all the names, two names which come up on the radar is Godrej Consumer and Imami. Hindustan Unilever has been on radar. Multiple attempts around that 2650 to 2700 marks have been a failure. But this has been the case for the last 2 years. But if it can sustain 2650, 2700 levels, that would be a breakout. But for now, Imami and Godrej Consumer look interesting.
Okay, that's the take coming in on some of the FMCG plays. Kunal, but let's in-depth, Shredar, what you're reading now on ICICI Bank. Today, of course, it's not fallen. It's holding up about 1%. But as a pattern, do you think it's sustainable, today's move?
So we'll need to see one more day of strong price action. In the last 4 days, as I was mentioning earlier, that the stock is still making a pattern of lower highs and lower lows. Now, yesterday's high, for example, for ICICI Bank on the spot levels was around 995. Today's high so far is around 992 approximately for ICICI Bank, which means that the stock has to either surpass yesterday's high to break this pattern, or if in case the correction aggravates a bit, then maybe the stock can come back towards its 50 DMA or the 200 moving average, which is closed at which is placed at 940, 960 levels for ICICI Bank. So whichever way, I think we'll have to wait out for maybe one more day of confirmation. If the stock breaks past about 995 mark, that could probably be an indication that maybe the 4 or 5 days of selling pressure is now behind, and the stock could get into a restart of a strong uptrend for itself.
Okay, point taken. Let's take the closing trades as well. Naresh, what's the closing idea?
So that would be a buy on Crompton Consumer. And the stock has given a breakout after going through a sideways consolidation for last many months. Hit a 6 to 8 month high also. So expecting this to go towards 360 in the short term.
What about you?
So I'll go with Voltas as a buy. The stock has finally managed to make a comeback again about 1000 plus levels. Looks attractive for a target of at least another 10% on the upside over the near term.
Okay, so both the picks coming in from the durable space per se, Crompton Consumer as well as Voltas. Tell you what, we'll slip into a very short break. Don't go anywhere. Welcome back. Quite a bit of spike in the market at the moment, and the bulk of it has actually come in the last 10 minutes. We have passed the level of 21,600. It's almost a 100-point rally, and a large part of that move is also thanks to what's happening to Reliance. It's past the level of around 2650 thereabouts right now. Of course, we remember the all-time high price to be close to 2800, but for adjusted for the Jio Financial Services, this is the record high that Reliance Industries stock has touched. So 2646 on that particular stock right now. Kunal, your take on Reliance Industries, and then of course we'll also listen into the bite of what Mr. Mukesh Ambani had to say at the Vibrant Gujarat Summit as well.
I think this is a clear breakout for Reliance Industries, and I think it's a breakout of almost like 2 years of range bound action for the stock. I think 2022 start Feb or March, the stock had made a high which was around this 2650 levels. Then November 2022 also the stock made a high of 2650, 600 approximately. The recent high in the month of June, July 2023 was also around this 2600, 2650 mark when the Jio Financials demerger happened. And then after a span of the next 6 months, we've seen the stock back again making a new high. So it's finally managed to break the previous highs and come out of this major 2-year consolidation. This should be extremely positive for the stock, and I would probably expect that this could probably be at least a 4 to 5 month of upward trend, and would be surprised that the stock actually now looks for at least a 10% further rise from current levels.
Wow, at least 10% rise. That's what Kunal is banking on as far as Reliance Industries is concerned. A couple of these pharma companies which are also buzzing. Take a look at AstraZeneca. We usually don't see such big spikes on the stock. That one is high by 16% as we speak. And Aurobindo Pharma is also in focus because it's looking at unlocking some value. There's an IPO that they're considering for raising almost 4,500 crore rupees. So that's the other stock in focus. For now, it's showing a bit of a spike, but we'll let that news get digested because the news suggests that the company is looking at as weighing a mega IPO of Eugia Pharma specialities and likely to raise around 4,500 crore rupees from that particular IPO. But we were going to listen into what Mr. Mukesh Ambani had to say because that stock is rallying quite fast right now. So let's listen into what he had to say at the Vibrant Gujarat Summit.
Specifically, Reliance will contribute to making Gujarat a global leader in green growth. We will help Gujarat target to meet half of its energy need through renewable energy by the year 2030. For this, we have started building the Dhirubhai Ambani Green Energy Giga Complex over 5,000 acres in Jamnagar. Today, Gujarat is fully 5G enabled, something that most of the world does not yet have. This will make Gujarat a global leader in digital data platforms and AI adoption. 5G enabled AI revolution will make Gujarat's economy more productive, more efficient, and more globally competitive.
Okay, that's Reliance and trade for you. Almost an 8% recovery from the lows of the day. But the finance minister as well is speaking. Let's cut across.
Financial inclusion program, which India has never seen before like that. Yes, financial inclusion has been a long-drawn goal on which every year a certain incremental number of people would come in. But now I'd like to highlight the fact that almost 50 plus crore people have already been brought into formal banking system. Where were we in 2014-15? Only 15 crore people were with bank accounts. Now that has gone up to 50 crore. Equally, connecting to the rural India and farmers. Particularly, I'll take the example of agro-processing, where the value addition element comes for agrarian products. Only 2 mega food processing plants existed in this country in 2014. That's gone up to 24 in 2023 within a matter of 9 years. That brings in value addition to the products. The farmers get better price. The value addition brings jobs, and some of them get exported also, the products. The other highlight which I'd like to bring in as the pillar for Amritkal, on which Amritkal is going to build towards a Vikasit Bharat, is about the emphasis given on sunrise industries. India will now become at least in-house producer of semiconductor capacities. EV adoption is happening in a big way. And therefore, these are things which have emanated from the FDI policy of the country. What is about the FDI policy? Just look at the numbers. India had attracted between 2000, April 2000 and March 2023, 23 years, we had attracted $919 billion in FDI. But it is important for us to recognize that 65% of this $919 billion, that is about $595.25 billion, had all reached India in the last 8 to 9 years. So in the 23 years, you're receiving $919 billion, of which $595 plus billion have come only in the last 9 years, beginning 2014. So your FDI is coming in. It's like water. It flows to the lower ebb. Where policies bring in greater certainty, convenience, ease of doing business, FDI flows in. Of course, disruptions of higher US Fed rate and other things can divert it elsewhere. But despite that, we've been receiving that kind of a flow of the FDI. It's not as if it's coming only for manufacturing. It's coming also for service sector. Service, particularly exports, have also seen a surge from $151 billion that it was US dollars to 325 billion US dollars. So these are all strong foundations which have been laid in the last 9 years. There are one or two more I'll add to it. The third largest startup ecosystem, the PLI scheme, which now cover 14 critical sectors. The UPI, about which, of course, BVR Subramaniam had very clearly mentioned, 100 billion transactions in just the calendar year 2023, over 180 lakh crores being the total value which is being transacted. There's global recognition. G20 was very clearly awed of India's experience in this area. So with all this, technology and digitization have brought people together. 50 crore people have been brought into the banking system. Now look at where the unbanked have come into the banking area. 44% it was where we were in 2014. Only 44% had accounts. Now more than 80% people in this country have bank accounts. Look at Gujarat, therefore, in this context. And Gujarat, which has released its Vikasit Bharat vision document. It is a state which has 5% of our population, just 5%, contributes 8.5% to our GDP. 19% gross value added every year happens from Gujarat to the GVA of the total country. Total gross value addition to the country, 19% comes from Gujarat. The per capita income is 1.7 times the national average. So it is a state which actually is rapidly moving forward, and the state is growing at 12% CAGR between 2011 and 2021 in the 10 years, while the national average is 10.4%. So rightly, we are here in Gujarat talking about its vision for 2047, and certainly 2047, which is going to be developed country for India. And in that, the engine of growth, I see Gujarat being very clear in its vision. I welcome the document, and I'm sure the people of Gujarat, under the leadership of the Chief Minister, will be able to move in that direction. Thank you very much.
Thank you. Okay, so that's the Finance Minister talking about how India is galloping towards becoming that aim of the third largest economy in the world, and that's likely to happen by FY28. Kunj Bansal also joining us on the show. Kunj, if we have to reach that level, become the third largest economy, which are the sectors you think will be the biggest contributors in the next leg of growth?
So for any economy to grow sustainably over a period of time, investments are very critical. And when we say investments obviously go into the infrastructure areas, into the capital goods, into the manufacturing. Of course, so these will be the critical areas where a lot of investments will have to go in. The derived impact of these automatically comes from the consumption areas. So the benefit of investment into the core areas, into the infrastructure, into highway, into manufacturing will get passed on in terms of increased standards of living, higher earning standard of people, higher earnings, increased disposable income and things like that, which will result into increased consumption. So that obviously will give a boost to subsequently to consumer durables, consumer goods, textiles, passenger vehicles, two-wheelers, and things like that. Having said that, let's also not forget that India, while the contribution to the GDP from agriculture is third in terms of ranking, we have highest from service, then from manufacturing, and from agriculture around 20%. But at the same time, a large percentage of our population is engaged in agriculture. So that is a sector that can't be ignored by the government if a holistic growth has to come in. So all are important, but yes, to give a quick boost, investment in the infrastructure and manufacturing and capital goods is the most critical thing.
Manufacturing, capital goods, which brings me to a Cochin Shipyard as well. The stock turn ex-date for stock split. The company, remember, is splitting the face value of the shares from 10 to now 5 rupees, and that stock is holding up 20% as we speak right now. There's, of course, some of the railway names as well, which we've been flagging out of, or railway-related names, and IRCTC, for instance, that as well is quite the buzzer today, holding up 2% as well in trade. And Kunj, for all the naysayers about, valuations, all the good being baked in already, the takeaways from the Gujarat Summit or Vibrant Gujarat Summit clearly entail that manufacturing with focus on defense and railways is a long-term theme.
Yeah, so it will have to be that way. Investments into the core areas can't be on and off, can't be intermittent, can't be for the short term. And it will give results also in the long term. And as I was saying earlier, it will give results not only out of its own sector, it will have the whole uh, chain of derived impact on the other industries, associated industries. In fact, why only in industries, even on the services. So you will need a whole range of IT services to cater to them, security services to cater to them, hospitality services to cater to them, cyber security services to cater to them, the whole online mechanism of payments, receipts to cater to them. So it will have to be long term, it will have to be long drawn, and that's how it should be as well.
Enough point taken. Just taking stock of a few other buzzers as well. The Arvind companies, Arvind Limited as well as Arvind Fashions, both are up around 6 to 7%. So we are watching out for that. And a lot of other companies as well, which are buzzing around in the trading session. So, in fact, the metal names is also something that deserves mention, because that index is the second best performer index today, and Vedanta is perking up as we speak on account of that Novama upgrade which has come by. Naresh, what's your view on Vedanta and the metals pack as a whole?
So Vedanta is looking interesting for the fact that it has been testing the 270 mark, which has been the resistance, and that is where it capped down from. So if it can sustain about 270, it could surprise on the upside. So for now, it's a preemptive buy with a stop loss below 258 and add more on the way up about 270. It has relatively underperformed compared to the rest of the metal names, which have gone back and hit new 52-week highs and all-time highs as well. So a risky bet here, but could be a good play if it sustains about 270.
Point taken. So that was about the metals pack and the kind of move that we are witnessing right now. But in terms of the other big buzzers from the frontline index is a whole host of names like pharma companies, Cipla, Lupin, etc., which is coming up. And of course, from the broader markets, you have Nalco, which is up 3%, Adani Enterprises, Birlasoft, as well as on the losing side, Manappuram as well as Metropolis. But before we move forward, wanted to talk about a couple of these IT stocks, because come tomorrow, of course, TCS and Infosys will be coming out with its earnings. So let me run you through the key expectations. For Infosys, the expectation is a bit subdued. In fact, on a quarter-on-quarter basis, most likely we are in for a decline, both in terms of the dollar currency as well as constant currency, because the kind of guidance the company has given for the full year tells you that the ask rate for Q3 and Q4 is fairly limited. In fact, for Infosys, there will be a margin pressure as well, maybe 60 to 70 basis point, because they have affected the wage hike from November 1st. So the 2-month impact of wage hike will come in this quarter. Deal wins are expected to be in the similar range of $2.5 billion. There are analysts on the street, the likes of Ambit, Kotak, Goldman Sachs, Morgan Stanley, etc., which are expecting a bit of a trimming of the guidance. Let's see whether it happens or not. For now, the guidance is at 1 to 2.5% growth with a margin of 20 to 22%. The management commentary in calendar year 24, the outlook, and more importantly, the leadership exits will be important to track for Infosys. For TCS, it will be a better showing purely compared to what Infosys will do, because there might be a paltry growth when it comes to constant currency, though the dollar revenue might still show a decline. The margins might be steady because there's no wage hike impact this time, and the BSNL deal should also kick in when it comes to the top line of the company. Separately, the deal win momentum should be similar to that $8 to $10 billion range that they have been maintaining. The management commentary around artificial intelligence, the headcount additions, and the fact as to how the calendar year 24 is likely to pan out will be important. So these are the important factors to watch out for a couple of these IT companies. But time now to slip into a very short break. When we come back, we'll discuss a whole host of other stocks with our guests.
Back with closing trades right here on ET Now. The agencies are reporting that CBI has registered a case on allegations of causing loss of 191 crore rupees, and I think 3 of the directors at SJVN have been pulled pulled up for it. Case against then 3 officers. So I think it's an old case that the flash is referring to. 4% of a tank down is what you're seeing on SJV, and we'll try and dig out some more info on that. In the meantime, it's pretty much status quo. It's Reliance which is really giving that leg up to the index today. Reliance, by the way, now is up nearly 3%. Look at the kind of spike that you're seeing on the stock. Cipla, of course, is the other one which is holding out very well. ICICI Bank has also climbed up further, about 1.5% higher there. And then, of course, Adani Ports and Enterprises as well holding up very well. Anisha, you want to add to those flashes?
No, I think just broadly SJVN has run up quite a bit, so there's definitely a room for disappointment there. But I'm not sure what this case history is like. We'll wait by to get more details on that one. But for now, the stock is reacting a bit negatively. But in terms of the other movers from the markets right now, Electra Greentech is one name, and a couple of these, hospital names or healthcare names at that, Vijaya Diagnostic as well as Rainbow Children's is seeing quite a bit of spike. Both of these stocks now holding up with a gain of around 3 to 4%, a vertical move on a couple of these names. In fact, Kunj, on the matter of these healthcare stocks, whether hospital names or diagnostic names, the valuations are definitely not cheap. But is there any stock that still you see has some value?
Valuations in general, as we all know in Indian market, are never cheap. In fact, if we talk of Sensex, the expected earning for FY24 will be about 1,000 rupees, give or take here and there. So we are trading almost 22 PE for the current year. And if next year's 10% growth, if we take, although expectation are for higher, but if we look at the last few years, 10% has generally been the long-term average. So still we trade around 20 times PE. Now the same index earnings gets flown down to the various sectors. So more than the specific numbers and stocks, I think what has happened is with the continuous inflow of the money in the Indian market in last few months, the every incremental money, every new money has been looking for sectors which either didn't participate in the market or which were under-owned, which is where the whole pharma, the hospital, the diagnostic space fitted in. Of course, there has been some number improvement here and there for multiple reasons, more specifically because of the margin improvement reasons. The volume numbers are yet to be seen in case of almost all of these subsegments. So that's where it is. If market continues to do well, we will continue to see this kind of money inflow and a similar kind of outperformance.
Okay, point taken. So that's about a couple of these healthcare stocks. But Kunal, if I can ask you about the IT pack, is there any positioning one should build up ahead of the earnings?
So from the large cap names, HCL Tech has made a comeback today, breaking past above the previous swing high. So that's a clear-cut case of a breakout. Infosys is lagging behind. I think the stock had its fair share of a mild uptrend, but then over the last 2 weeks or 3 weeks, the stock has gone through a correction. But it's not been a very sharp correction also for Infosys. The stock has just broadly, I think, corrected by a margin of 5% approximately in the last 2-3 weeks of this correction. So that also makes the chart prospects for Infosys a bit better than the previous times when the stock went into the results. Wipro is the other stock which I believe could probably be one of the key candidates of a strong reversal. The stock has shown some decisive change in terms of data, price, volumes. The delivery volumes as well as the futures volume have been a bit more better for Wipro this time around. So I'm expecting the stock to also get into a turnaround from the large cap names. And from the mid caps, I think one of the stocks which is on today's chart and yesterday's time frame chart is inching towards a breakout is L&T Technology Services. That stock at 5,300 approximately looks attractive for a breakout of at least another 250-300 points on the very short term time frame.
Okay, that's the positioning ahead of the IT numbers, which kickstart tomorrow full throttle. 21,700 is where we're currently at in the futures. And look at the names which are actually perking up. While, of course, Reliance has made a sudden move. Delta Corp, even though the numbers were disappointment, we've all seen the spate of business for Delta Corp. But this is one stock which has actually shot up to the high point of the day. It's holding up about almost 3% as we speak right now. So quite a bit of recovery coming in there. Of course, the Adani names are holding out, no doubt that. But on the downside, it's L&T, SBI, Axis, Bajaj Finance. They've really been unable to see any material move coming in right now. Kunj, ahead of the earnings, what's the call coming in on some of the financial names? What do you think the commentary is going to be like at the earnings?
So if I have to analyze the earnings season across the market, across all the sectors, Based on the expectations and based on the track record, the performance in last few quarters, based on the market dynamics and analysis in terms of demand scenario, I think capital goods is a sector which will continue to show good numbers and backed by mainly by the continued investment by the government, added by the private sector as well for the last 2 or 3 quarters. Auto numbers have been decent in the last 2 months, so we should see those numbers also coming in good. Even in terms of bottom line, we should see the margin improvement because they have had the support of the raw material reduction also. And to add to that, the third will be the whole banking and financial services space, including NBFCs, which is where we should see improved numbers. Consumers is an area which will continue to show subdued numbers, both consumer durables as well as consumer non-durables, because the demand scenario has clearly not been there, especially in the lower end consumption.
Point taken. So that's about the earnings season and what we should expect. Last 2.5 minutes for the trading session, and the big star performer for today was clearly the stock of Reliance, because that is what single-handedly has taken the index past the level of 21,600. Because for most part of the day we were into the red. It's Reliance Industries, and then if you had to add to that list, it was ICICI Bank that was showing a bit of a breakout. That stock is up around 1.3%. HCL Tech, HDFC Bank as well as TCS. Infosys a rank underperformer. NTPC going home with a cut of around 2%. Axis Bank, Bajaj Finance. These are some of your other names which are probably going in the red. But Naresh, we have taken Kunal's view on Reliance Industries. He believes that there's a 10% kind of breakout which is imminent on the counter. Would you concur with the view, Naresh?
Yeah, the view would be similar. We've hit a new all-time high after almost 2 years. And in such a scenario, when you see a 3% move on the breakout, it's generally a confirmation. So it becomes a buy at current levels as well as add-on dips.
Just about a minute and a half left to go before we wind down for the day. So let me just take in some BTST ideas then. Kunal?
So I'll go with either two buy calls, and from the short-term time frame, Max Healthcare is something which looks attractive, trading at 730 plus level, so would suggest a buy with 800 as a target, stop loss at 700. And Gujarat Gas is also one of the stock which is on the verge of a big breakout on the medium-term chart. So 530 as a target, stop loss at 502.
What about you, Naresh? Any specific BTST trades?
First would be a buy on Crompton Consumer, good 6-8 month higher, stop loss at 319, target price of 330. Second would be a buy on Cipla, new all-time high here, stop loss at 1300, target price of 1360.
Right, okay, let's wind up for the day. And today, of course, the stars got to be Reliance Industries. That's managed to hold out and give that leg up to the index. 0.5% higher is where we're shutting shop for the futures, above the 21,700 mark. 3% almost a move coming in Reliance, and that's really been meaningful for the Nifty. Although standalone, the Nifty hasn't made much of a move. I think whatever it is has been thanks to Reliance and ICICI Bank, which also scaled up higher by about 1.25%. The Adani names did okay. TCS Infosys not, L&T flat, M&M Maruti flat, and yeah, some sporadic moves like a Cipla, LTIM, Tata Motors as well were pretty warm in today's trading session. There was, of course, Birla Soft as well, which held out by about 3%, and Delta Corp jumped up about 3.5% as well. On the flip side, weakness for NMDC, for IGL, ONGC, which were big drags in trade today. Balrampur Chini, Manappuram, Metropolis as well held out in the red. But that's pretty much it then on this edition of Closing Trades. We'll see you with the market action tomorrow morning at 8 a.m. Thanks for watching.